Welcome to our deep dive
Okay.
into Warren Buffett's 2013 letter to Berkshire Hathaway shareholders.
Right.
We've got excerpts from the letter,
Okay.
some thought-provoking questions, and even a peek
Okay.
at how Berkshire's performance stacked up against the S&P 500.
Gotcha.
Whether you're a seasoned investor or just starting out,
Okay.
this deep dive is for you.
Okay.
We're aiming to kind of like break down some of these complex financial concepts,
Right.
share some memorable takeaways,
Yeah.
and hopefully give you that like well-informed edge,
Sounds like a plan.
you know?
Yeah. Buffett's letters are always a treasure trove of insights.
Absolutely. And you know what strikes me right off the bat?
Yeah.
Is Buffett's just like unwavering confidence in the U.S. economy.
Yeah.
He calls his BNSF acquisition an all-in wager
Wow.
on America's future.
Okay.
Pretty bold statement, don't you think?
It is, but his confidence stems from like a deep understanding of America's long-term growth potential.
Yeah.
Remember, he cites the Dow Jones Industrial Average's growth from 66 to 11,497
Yeah,
during the 20th century.
right.
He's looking at the big picture.
He is. And here's a fact that I found mind-boggling.
Okay.
BNSF, which is actually a descendant of a company
Wow.
recommended by Ben Graham in his book back in 1949,
Okay.
now earns its entire 1949 valuation every 4 days.
Wow.
That's the power of compounding in action.
It really highlights the incredible wealth creation
Yeah,
that can happen when you invest in solid businesses for the long run.
right.
Speaking of long-term thinking,
Yeah.
Buffett introduces the concept of the Powerhouse Five in this letter.
Ah, yes, the heavy hitters.
Yes.
Can you give us a rundown of who they are
Sure.
and why they're so important to Berkshire?
The Powerhouse Five refers to BNSF,
Okay.
Iskar Lubrizol Marman, and Mid-American Energy.
Gotcha.
These are Berkshire's 5 major non-insurance companies.
Okay.
And together, they brought in a record $10.8 billion in pre-tax earnings in 2013. What's interesting is that Buffett acquired these companies
Okay.
over a span of 9 years with minimal dilution of shareholder value.
So it's not just about acquiring businesses, it's
Yeah.
about acquiring them strategically.
Exactly.
And then there's his bolt-on acquisition strategy, which I find intriguing.
Okay.
Can you elaborate on that a bit?
It's a clever approach.
Yeah.
Essentially, Buffett encourages the managers of his subsidiaries
Okay.
to seek out smaller
Yeah.
strategic acquisitions
Okay.
that can further boost earnings without adding a significant amount of work
Right.
for him and Charlie Munger.
So it's like a growth hack.
Kind of.
Buffett empowers his managers to find these little wins
Yeah.
that add up to big gains for Berkshire.
Right.
But doesn't this strategy also carry risks?
It does.
What if those smaller acquisitions don't pan out as expected?
There's always a risk with any acquisition,
Right.
big or small.
Okay.
But Buffett mitigates that risk by trusting his managers
Yeah.
to make sound decisions.
Okay.
And by focusing on companies that fit well
Yeah.
within Berkshire's overall philosophy.
Gotcha.
It's about finding businesses with strong fundamentals
Right.
and a history of profitability.
Makes sense.
Yeah.
Okay, let's shift gears and talk about insurance,
Oh,
which seems to be like the heart and soul of Berkshire's operations.
absolutely.
Uh,
Insurance is a unique business.
yeah,
And Buffett loves it because it provides this incredible thing called float.
right. And he talks about how Berkshire's float has grown significantly.
It has.
That's a significant jump.
Yeah.
What factors contributed to this growth in Berkshire's float?
Well, in just 11 years, Berkshire's float ballooned from $41 billion
Wow.
to a whopping $77 billion.
Okay.
And during that same period, they made a $22 billion underwriting profit.
Wow.
For those unfamiliar, underwriting profit
Yeah.
is essentially that profit an insurance company makes from its core insurance operations after paying out claims and expenses.
So it's like getting paid to hold other people's money, right?
Exactly. Think of it like this.
Yeah.
They collect premiums up front,
Right.
pay claims later,
Okay.
and in the meantime, they invest that float.
Okay.
It's a massive revolving fund.
And because of their size and financial strength,
Yeah.
Berkshire can take on risks that other insurers wouldn't touch.
They can?
Like that deal with Lloyd's of London
Yeah.
where they took on billions in potential asbestos claims.
That deal speaks volumes about the level of trust and confidence people
Yeah.
have in Berkshire's ability to manage risk and deliver on its promises.
You know, one story that really stood out to me in this letter
I love that.
is the tale of Rose Blumkin,
Yeah.
the founder of Nebraska Furniture Mart.
I love that story.
Buffett affectionately calls her Mrs. B.
Yeah. Her story is remarkable.
It is.
Mrs. B embodies the entrepreneurial spirit
Yeah.
that Buffett admires so much.
Yeah.
She came to America not knowing any English,
Wow.
never went to school,
Okay.
and built an empire from scratch.
And what I find fascinating is how Buffett acquired her business back in 1983.
Right.
A simple one-and-a-page proposal, no lawyers, no bankers, just a handshake built on trust.
It speaks volumes about Buffett's values.
It does.
He emphasizes that Mrs. B's word was her bond.
Yeah.
He values integrity and character in the people he does business with,
Right.
sometimes even more than the financials.
Absolutely. Mrs. B's story embodies that spirit of entrepreneurship.
Yeah.
But what about those of us who aren't building empires?
Right.
Buffett has advice for us, too.
He does.
He actually dedicates a section of this letter
Yeah.
to the know-nothing investor.
He does. And he uses simple examples like investing in a farm or real estate
Yeah.
to illustrate his point. He emphasizes the importance of understanding the underlying asset,
Right.
focusing on its future productivity and ignoring the noise of the market.
So you're saying that instead of trying to pick individual stocks?
Well, he's saying that for many people, trying to pick individual stocks is more like gambling than investing.
Okay.
It requires time, knowledge, and discipline.
Right.
And even then, there's no guarantee of success.
Yeah.
He suggests that for those who don't want to dedicate their lives
Right.
to studying the markets,
Yeah.
a low-cost S&P 500 index fund is a sensible alternative.
It's a diversified, hands-off approach.
It is.
And he even recommends this strategy for his wife's trust in his will.
Exactly.
That's a pretty strong endorsement.
It really is.
Coming from the Oracle of Omaha.
He believes in the power of simplicity
Yeah.
and low-cost investing.
Right.
He's basically saying, don't overthink it.
Yeah.
If you don't understand a business or an industry, don't invest in it.
Right.
Stick with what you know.
Speaking of understanding, we can't forget the influence of Ben Graham,
Right.
Buffett's mentor and the author of The Intelligent Investor.
Yeah,
That book was a turning point for Buffett.
it was.
He highlights 2 specific chapters
He does.
as timeless guides to invest. Yeah.
And I love that anecdote
What's that?
about how Graham unknowingly recommended Geico in the first edition of his book.
Oh, yeah.
That's the very same company
Right.
that became a cornerstone of Buffett's success.
It's a funny little twist of fate.
It is. It highlights the importance of recognizing value
Yeah.
even in unexpected places.
Yeah.
And it shows that even the greatest investors can stumble upon brilliant ideas
Absolutely.
in the most unexpected ways.
It's all about keeping your eyes open and being willing to learn from those who came before you.
Absolutely. See, so we've covered a lot of ground in this first part.
Yeah, we have.
We've talked about Buffett's big bet on America,
Right.
the Powerhouse Five, the magic of float,
Uh-huh.
the inspiring Mrs. B,
Yeah.
and even his advice for the know-nothing investor.
Right. And we've seen how his investment philosophy emphasizes long-term thinking,
Right.
ignoring market noise, and investing in what you understand.
Absolutely.
It's really valuable advice. It is so... What other nuggets of wisdom are we going to uncover
Yeah.
as we continue this deep dive?
I don't know. You're going to tell me.
Well, you'll have to stay tuned for part 2,
Right. I'll stay tuned.
where we'll delve deeper into Berkshire's various businesses and explore some of the challenges and opportunities they face.
Yeah, sounds good. You know, as we delve deeper into this letter,
Yeah.
one thing that really stands out is how Buffett breaks down Berkshire's operations
Okay.
into 4 main sectors.
Okay.
Insurance-regulated, capital-intensive businesses, manufacturing, service, and retailing, and finance and financial products.
It's like a mini economy all within Berkshire Hathaway.
Exactly, and it highlights the incredible diversity of their holdings.
Yeah.
But let's start with what Buffett called the core operation insurance.
Okay. Back to the engine that drives so much of Berkshire's success.
Right.
Buffett seems particularly proud of their track record in this sector.
He points out that they've achieved 11 consecutive years of underwriting profit, totaling a staggering $22 billion.
That's an impressive streak.
It is.
For those of us who aren't insurance experts, can you quickly explain what underwriting profit means?
Of course, underwriting profit is essentially the profit an insurance company makes from its core insurance operations.
Okay.
It's calculated by taking the premiums they collect
Right.
and subtracting the claims they pay out
All right.
and the expenses associated with running the business.
So it's not just about collecting premiums.
Right.
It's about managing risk effectively.
Right.
And keeping those costs under control.
Precisely. And Buffett attributes their success in this area to their disciplined approach
Okay.
and the expertise of their insurance managers.
Speaking of those managers, Buffett seems to have a real knack
He does.
for finding and retaining top talent.
Yeah.
He sings the praises of Ajit Jain,
Yes.
who leads Berkshire Hathaway Reinsurance Group.
Ajit Jain is a legend in the reinsurance world.
Yeah.
Buffett highlights his ability to assess risk
Yeah.
and make bold decisions, often taking on risks that other insurers wouldn't touch.
It sounds like Ajit Jain has a real talent for finding those hidden gems opportunities where others see only danger.
Exactly, and Buffett trusts him implicitly.
Wow.
He even says that if the insurance industry were to experience a $250 billion loss
Okay.
from a mega catastrophe,
I know.
Berkshire would likely still record a profit for the year.
Okay.
That's how confident he is in Ajit's ability to manage risk.
That's incredible.
It is.
It really speaks to the strength and stability of Berkshire's overall portfolio.
It does.
So we've got the reinsurance giant,
Right.
but Buffett also mentions Berkshire Hathaway Specialty Insurance,
Yes.
which is a relatively new venture.
That's right. This initiative, led by Peter Eastwood, takes them into the world of commercial insurance,
Okay.
where their financial strength and reputation for paying claims promptly gives
Yeah.
them a significant edge.
So it's like they're leveraging their existing strengths
Yeah.
to expand into new markets. And of course, can't forget about Geico,
Right.
the company where Buffett got his start in the insurance world.
Now, led by Tony Nicely,
Okay.
Geico is a true success story.
It is.
Their low-cost operating model allows them to offer competitive premiums
Yeah.
and consistently gain market share.
And Buffett highlights their moat,
Yes.
an enduring competitive advantage that rivals struggle to overcome.
Right.
I love that he uses the analogy of a moat
It is a good one.
to describe a company's competitive advantage.
Yeah.
It's such a vivid image.
And he points to their gecko mascot
Oh.
as a symbol of their focus
Oh, yeah.
on saving customers money.
Right.
It's a simple but effective marketing strategy
It is.
that has resonated with consumers.
So we've covered the big players in Berkshire's insurance portfolio.
We have.
What about the rest of their businesses?
Let's see.
Buffett Group's BNSF, the railroad,
Yep.
and Mid-American Energy, the utility giant,
Yeah.
together as regulated capital-intensive businesses.
He does. And he explains that these businesses share some key characteristics.
Okay.
Both require massive investments in long-lived regulated assets
Right.
and utilize a significant amount of long-term debt, which is not guaranteed by Berkshire.
So they're borrowing money to fund their operations.
Yes.
But they're doing so in a way that doesn't put Berkshire's overall financial strength at risk.
Exactly. He explains that each company has strong earning power.
Yeah.
That can easily cover its interest payments, even in a tough economic environment.
Okay.
And he emphasizes that both BNSF and Mid-American have a history of delivering consistent, reliable returns.
And Buffett calls BNSF the most important artery in our economy's circulatory system.
He does.
That's quite a statement.
It is.
What makes this business so vital?
Well, BNSF carries about 15% of all intercity freight in the United States,
Wow.
more than any other transportation provider.
Okay.
And they do it in a fuel-efficient and environmentally friendly way.
He also stresses the importance of investing for the future.
He does.
He mentions that BNSF spent a record $4 billion on infrastructure in 2013
Oh.
and plans to spend even more in 2014.
Yeah.
He compares it to Noah building his ark.
It's a great analogy.
It is.
He's saying that you have to be prepared for the future,
Right.
even if you don't know exactly what it holds.
Yeah.
You need to have the capacity and infrastructure in place to handle whatever comes your way.
And speaking of preparing for the future, Buffett seems particularly excited
Yeah.
about Mid-American Energy's investments in renewable energy.
He touts their leadership in renewable energy,
Hey.
noting that they've gone from 0 wind generation capacity 9 years ago
Wow.
to accounting for 7% of the country's total wind power today.
That's a big jump.
It is. And they're investing heavily in solar as well.
It seems like they're well positioned to capitalize on the growing demand for clean energy.
They are. And
Yeah.
they have a significant advantage over other utilities
Okay.
because they retain all of their earnings. This allows them to make long-term investments without having to rely on external financing.
That's a powerful position to be in.
It is.
It gives them the flexibility to make strategic decisions that are in the best interests of the company,
Yeah,
even if those decisions don't always align with short-term market expectations.
exactly. And it reflects Buffett's long-term perspective.
Right.
He's willing to forego immediate dividends in order to invest in projects that will generate sustainable returns for decades to come.
So we've got the railroad and the utility company,
Right.
both led by exceptional managers.
They are.
What's next on our tour of Berkshire's businesses?
Let's explore the world of manufacturing, service, and retailing.
Okay.
A segment where we find a fascinating mix of businesses from lollipops to jet airplanes.
Now that sounds like a fun mix.
It is.
But I imagine this segment might be a bit more challenging to analyze, given its diversity.
You're right. Buffett acknowledges that some of these businesses have terrific economics, while others have generated more modest returns. He even admits to making some mistakes in capital allocation within this segment.
So even Buffett isn't immune to making mistakes.
Even Buffett!
It's refreshing to see that level of honesty and self-awareness.
It is, but he also points out that his biggest blunders usually involved smaller acquisitions.
Okay.
His larger bets have generally worked out well, sometimes spectacularly so.
It's a good reminder that even the best investors make mistakes.
Yeah.
But it's the ability to learn from those mistakes and avoid repeating them that truly sets them apart.
Absolutely. And Buffett emphasizes that even a business with great economics can be a bad investment if the purchase price is too high.
Okay.
He reminds us that price is what you pay,
right,
and value is what you get.
It's a simple but profound concept that's easy to forget in the heat of the moment.
It is.
We often get so caught up in the excitement of a potential investment that we overlook the fundamentals.
It's easy to do, but Buffett is a master of discipline. He sticks to his principles and doesn't let emotions cloud his judgment.
Speaking of sticking to his principles amidst all the numbers and financial analysis,
Yeah.
Buffett always finds a way to bring it back to the human element.
He does.
He can't resist sharing an update on Nebraska Furniture Mart's expansion into Texas.
Like that.
And reminisces about the day he bought the company from Mrs. B back in 1983.
It's clear that he admires her entrepreneurial spirit and values her integrity.
He does.
And he urges aspiring business managers to study her example.
Okay.
Emphasizing her hard work, customer-centric approach, and unwavering integrity.
It's a great reminder that success in business isn't just about the numbers.
No.
It's about building relationships, treating people fairly,
Right.
and focusing on the long term.
Absolutely. Now, shifting gears again.
Okay.
Let's talk about the final segment of Berkshire's operations, finance, and financial products.
Okay, what can we learn about this part of the empire?
Let's see.
It seems like a bit of a mixed bag.
It is. It includes a mix of businesses, including 2 rental companies, XTRA, trailers, and Court Furniture.
Okay.
Clayton Homes, the leading producer and financer of manufactured homes, and a collection of financial assets.
He also includes Berkshire's 50% interest in Berkadia Commercial Mortgage in this category.
Yeah.
So it's not just about owning businesses outright.
Right.
It's about strategic partnerships as well.
And one interesting aspect of this segment is Clayton Homes,
Okay.
which he includes here because of his large mortgage portfolio.
Okay.
They own and service over 326,000 mortgages.
Wow.
Totaling $13.6 billion.
That's a significant financial operation in its own right.
It is.
It's interesting to see how intertwined these businesses are.
He mentions that in recent years, as manufactured home sales slumped,
Okay.
Clayton's mortgage business generated a large portion of its earnings.
Right.
But he's optimistic about the future,
Yeah.
noting that new home sales are starting to rebound.
He seems to have a knack for finding value in unexpected places.
He does.
Even when one part of a business is struggling,
Yeah.
he can often find another area that's thriving.
He praises Kevin Clayton, the company's CEO,
Okay.
for navigating the housing downturn successfully,
All right.
and he seems to be looking forward to continued growth in this segment.
And what about the rental companies, Court and XTRA?
Yes.
They seem to be performing well, too.
They are. He highlights the strong performance of both companies.
Okay.
And expresses confidence in their managers,
Right.
Jeff Peterson at XTRA
Gotcha.
and Bill France at Court.
Okay.
He emphasizes their plans to expand their rental fleets
Yeah.
and capitalize on market opportunities.
So it seems like even in this relatively small segment of Berkshire's operations, there's a lot of potential for growth and innovation.
There is. And it's clear that Buffett is just as focused on finding value in these smaller businesses as he is in the larger ones.
Right.
He's not afraid to get his hands dirty and delve into the details.
So we've covered insurance-regulated, capital-intensive businesses, manufacturing service and retailing, and finally finance and financial products.
We have.
It's amazing to see the breadth and depth of Berkshire's holdings.
It is. And it's a testament to Buffett's ability to identify and acquire businesses with strong fundamentals and a history of profitability.
But I imagine managing such a diverse portfolio comes with its own set of challenges.
It does.
How does Buffett stay on top of it all, and what can we learn from his approach?
Good questions.
Let's continue our deep dive into Warren Buffett's 2013 shareholder letter in part 3, where we'll explore his investment philosophy and delve into some of the broader economic trends he discusses.
Sounds good.
Okay, we're back for the final part of our deep dive into Warren Buffett's 2013 letter to Berkshire Hathaway shareholders.
All right.
We've explored Berkshire's sprawling empire of businesses, from insurance to railroads to furniture rentals.
Yeah, it's quite the mix.
It is. Now, let's talk about their investment portfolio, the stocks that make up a significant chunk of Berkshire's value.
Okay, sounds good. This is where we get to peek into the mind of the Oracle of Omaha.
Right.
And see how he thinks about investing right off the bat. Buffett lists Berkshire's 15 largest common stock investments at the end of 2013.
I bet there are some familiar names on that list.
Oh, you'll definitely find some household names like Coca-Cola and American Express.
Okay.
This shows that Buffett isn't chasing obscure companies or betting on the next big tech startup.
Right.
He's investing in companies everyone knows and understands.
That seems to go against the grain of what we often hear about the advice to find those hidden gems before everyone else does.
Well, Buffett's approach is all about focusing on the long-term value of a business.
Okay.
He and Charlie Munger view stocks as small portions of businesses, applying the same rigorous analysis they would use when acquiring an entire company.
So they're not just looking at stock prices.
Right.
They're evaluating the underlying business, its management team, its competitive landscape, and its long-term growth potential.
Precisely. Buffett reiterates his key criteria for investing.
Okay.
He looks for companies where he can estimate an earnings range for 5 years out or more.
Yeah.
And then he tries to buy those companies at a price that's reasonable in relation to those earnings expectations.
It sounds like a pretty straightforward approach.
It is in theory, but the real challenge lies in accurately estimating those future earnings.
Right.
And having the discipline to wait for the right price.
And I imagine all the noise and hype in the market can make it even more difficult to stick to that disciplined approach.
It definitely can, but Buffett is a master at tuning out the noise.
Yeah.
And focusing on the fundamentals. He mentions that they never let macro or political factors influence their investment decisions.
Really?
They stay laser focused on the businesses themselves.
So they're not trying to predict the next recession or election outcome?
No. They believe that trying to time the market or make investment decisions based on political events is a recipe for disaster.
He acknowledges that they'll make mistakes.
Of course, everyone makes mistakes.
But they try to avoid the big disasters that can happen when investors get swept up in market hype or speculation.
Exactly. He's all about minimizing risk and protecting capital.
Okay.
He'd rather miss out on a potential winner than invest in a company he doesn't understand or that he believes is overvalued.
Okay. That makes sense for someone like Buffett, who has a team of analysts and access to all sorts of information.
Right.
But what about the rest of us, the know-nothing investors?
Yeah, good question.
Does he offer any advice for those who don't have the time or expertise to analyze individual companies?
He does. He suggests a simple but effective strategy. Invest in a low-cost S&P 500 index fund.
It's interesting that he recommends the same strategy he advises for the trustee of his wife's trust in his will.
Right.
It's a pretty powerful testament to the effectiveness of this approach.
It really is. He believes in the power of simplicity and diversification.
Yeah.
By investing in an index fund, you're essentially owning a tiny slice of the entire American economy.
And you don't have to worry about picking individual winners or trying to time the market.
Exactly.
Which can be incredibly difficult even for experienced investors.
Right. Buffett cautions against trying to time the market,
Yeah.
warning that the main danger is buying in at a time of extreme exuberance
Okay.
and then getting spooked when the market inevitably corrects.
He encourages investors to accumulate shares gradually over time.
Yeah. Dollar cost averaging is a great way to do that.
Okay.
It's a simple concept. You invest a fixed amount of money at regular intervals.
Right.
Regardless of the market price. This helps you average out your purchase price over time.
And to avoid selling when the news is bad and stocks are down?
Exactly.
Yeah.
It's about staying the course and riding out those inevitable market fluctuations.
And he also emphasizes that liquidity, often seen as an advantage in investing, can become a curse.
It can.
If it leads to impulsive buying and selling.
Right. He uses the analogy of a farmer who wouldn't think of frantically buying and selling his farmland based on the daily chatter of his neighbors.
Yeah. It's a great analogy. Focus on the long-term value of your investments and don't get distracted by the short-term noise of the market. Speaking of long-term thinking, we've talked a lot about Buffett's investment philosophy, but I'd love to hear more about how his mentor Ben Graham influenced his thinking.
Yeah, Ben Graham's book, The Intelligent Investor, was truly a turning point for Buffett.
Right.
He credits it with transforming his financial life.
Wow.
And highlights 2 chapters as timeless guides to investing.
And we mentioned earlier the amusing anecdote about Graham unknowingly recommending Geico in the first edition of his book, the same company that later became a cornerstone of Buffett's success.
Yeah, it's a funny little twist of fate. It highlights the importance of recognizing value, even when it's not immediately apparent.
It seems like Buffett's approach to investing is as much about temperament and discipline as it is about financial analysis.
Absolutely. He understands that investing is as much a psychological game as it is a financial one.
And as we wrap up this deep dive, Buffett ends his letter on a somewhat sobering note. He expresses concern about the financial challenges facing local and state governments, largely due to underfunded pension plans.
He calls it a gigantic financial tapeworm.
Wow.
And warns that we'll likely be hearing a lot of bad news about public pensions in the coming decade.
It's a problem that's been building for years.
It has, and it's one that will require tough choices and shared sacrifice to solve.
He urges those in positions of power to address these problems promptly.
He does, and he even provides a link to a memo he wrote back in 1975 to Katharine Graham.
Wow.
About the pitfalls of pension promises.
It's a reminder that even the most successful businesses and governments can fall victim to financial mismanagement if they're not careful.
Absolutely. And it highlights the importance of long-term planning and responsible stewardship of resources.
Well, there you have it. Warren Buffett's 2013 letter to Berkshire Hathaway shareholders, a masterclass in long-term value investing sprinkled with wisdom, humor, and a deep understanding of both business and human nature.
We've covered a lot of ground in this deep dive. From the power of compounding and insurance float to the importance of staying within your circle of competence and ignoring market noise.
We've learned about Berkshire's diverse businesses, their impressive track record, and the talented managers who make it all happen.
And we've been reminded that even the Oracle of Omaha makes mistakes.
Right.
But it's the ability to learn from those missteps and stay focused on the long game that truly sets great investors apart.
As we conclude this deep dive, I encourage you to think about what resonated most with you.
Yeah.
What insights from Buffett's letter will you apply to your own investment journey?
Don't forget to check out the links we've provided to the full shareholder letter and Mrs. B's original financial statements.
Right. There's a lot more to dig into there.
There's always more to learn, more to explore, and more to discover in the world of investing.
Thanks for joining us on this deep dive into Warren Buffett's wisdom. Until next time, keep learning, keep exploring, and keep investing in your future.